Good evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, November 4th, 2020, the day after, right? Remember that Dennis Quaid movie? I think it was Day After Tomorrow. It's a great movie. I've probably seen it a dozen times about the freezing. Okay, so let me get this out of my chest, and I don't want to repeat it day after day. It appears that Joe Biden is going to win the presidency. As of my recording, he's 6 votes away from getting the Electoral College vote, and he has, at this point at least, a several-point lead on the popular vote. President Trump is going to the Supreme Court to have his case heard. The question is, do they take the case? They don't have to. And if they do, will they make short order of it? It's very difficult to tell a state from the Supreme Court that you're doing something wrong if it's within the state mandate to do what they're doing. It's an uphill battle. So I have come to the conclusion that we will have a Biden presidency, a Democratic House of Representatives, and the Republicans retain control of the Senate. So you have a balanced Congress. Welcome, Joe, to the other side of the equation, where all those Republican senators that were taking for 4 years unbelievable pressure on them get a chance to put it on you. Now, we're not going to go after Joe for impeachment, or are we? I don't know. And when I say the Senate, what can you say? But what it does do is the market's telling you. The market thinks it's a good thing to have a balanced Congress. And whether Joe's the president or President Trump is, you're going to have a balanced Congress again. That is the key. And the market likes it. The market is giving you the rally. The market realizes it's not going to be the blue wave. It's not going to be spend, spend, spend. That isn't going to happen. It is going to be a COVID relief package, probably after the lame duck Congress into January. There will be maybe some infrastructure. There should be health care reform, something President Trump couldn't done, but I'm sure a number of Republicans want to get that done. And it's 4 years of whatever it's going to be. Wrap your arms around it and now digest it. Will we have the reinflation? Well, not the way you would under a blue wave, but probably to a degree. We have the Fed meeting right now. People don't realize it. It's all lost in this. I doubt they're going to do anything. We'll hear Fed Chair, I think it's tomorrow, his press conference, and he'll talk and say, we got to see how this is going to work out. COVID's a threat to the economy. You know the routine. Let's go to the charts. The battleground has been the 18-day average of closes. We've corrected down to it. We still have the pattern of basically lower highs, lower lows. What you want to get over is this 34.73 on a weekly close to at least say, that's over. But I can argue it's over already, the correction, because you're staying over that 18-week average. Not bad. If we do that, the bias does turn up on the chart. When we take a look at this chart, if you come back here, you had a downtrend. Yesterday you started a correction, and with the election results, the market exploded today. So where did it go to? Well, it certainly took out a previous high. So as I said, you had a pattern of lower highs, lower lows. The market got over that, and you ended that pattern. The pattern now is a higher high and a lower low. That is not a trend. The market's over the 18-day average. It did find support in the neighborhood of the 100-day average and the lower Bollinger Band, what I teach. That's where I think the pros, right here is where I think the pros came out. I don't think they got out there. I think it was right here. In terms of momentum, it's up. It's not overbought. There's room if the market wants to run, but it's a heck of a run from 32.25. You're already up 220 points roughly. That's a big move. It probably needs to consolidate a certain amount of it. Unlike the charts that are sitting there in SPY, DIA, the QQQ, there aren't really gaps in our charts. Why? On the futures, this market trades 23 hours a day. On those specific ETFs And spiders, no, they don't. They open at 8:30, they close again at 3 o'clock. They're natural to have those gaps. Gaps often get filled, so when you use the two combinations together, you start coming up with a pretty cool game plan. I like what I do. I put them both out every day. I put out 2 spider ETFs today, videos for my subscribers. But you can see that you found your support, you're up. The downtrend is over. The question is, are we going to go into an uptrend? I am of the opinion Santa Claus is coming to town. I do believe that by the end of the year, you'll see Santa in full swing. What's to stop him now? We know we're going to get worse COVID numbers. They're coming at us right now. We run 2 weeks behind Europe. You're going to wake up each day, probably to new records in America. Our hospital system's going to do whatever. But we start looking to see when their numbers recede because we'll start anticipating it. We're learning a lot about COVID. We also have so many trials going on. What happens if somebody hits a winner? They get the vaccine. Markets explode. That's when you get your switch probably from your QQQ into your growth stocks, but not when the COVID's right here. So you were not as strong today in the Dow. If you take a look, this market actually finished the day at 27,735, back under its 18-day average, and it kept the downtrend very much in play. You can see that. When I come over to the Russell, a big outside day up. This is your small cap. They're going to get some benefits out of what's going on. Higher lows, higher highs. So to me, the loser today, you saw with Caterpillar stock and some of the others, some of those growth areas because of the makeup as to what it's going to look like in our government. And as I said, I want to repeat this. Even if President Trump wins, the Democrats have control of the House. If he doesn't and Biden wins, he doesn't get the Senate. The balance is there. That's the way I'm looking at it. Higher lows, higher highs over the 18-day average. This is bullish. The pros might support this market at 1602. It's a rather lengthy move back to today's low, and it's an outside day up. So if you take today's low out on Thursday or Friday, I'd be concerned. I don't see it, but it could happen. Yes, it's only going to call for that area to go down to, but why would it be going back there? So it's something that I'm looking at. If the market wants to extend the gain, well, wherever the Bollinger top comes in is where I'll look for the resistance. In the VIX cash, need I tell you, I thought the VIX was going to be down today. I said that yesterday. I think it was Guy Adami was talking. He thought it would be back into the 20s. I agreed with him. It didn't matter who won. That's how I viewed it, because I was also of the opinion that the Senate would stay into the red, and it did. Lower highs, lower lows. You ended the uptrend. Now, you are in a downtrend. A lot of risk, back up to 36.85. First support back here. We'll see what the market wants to do. T-bonds. Whoa. We had a market that had gotten itself down, and I know you know this, it was pushing the 9 level, 9/10. What a dramatic move back today. This is what you get going through these reports. The swing today from low to high was almost $5,000 a contract on futures. Told you, that's why the clearing firms are raising margins. You're up here. Those clearing firms, by the way, they're not going to take these margins down just yet. You're days away. It's going to come very quick. And that's because each day that goes by, we're going to get less volatile as more is known about the situation and the market adjusted to it. And futures adjust like this. That's my history with them. You have a lower low, higher high pattern. You've ended a downtrend. You have not begun an uptrend. Same thing happened in the 10-year notes. And look at the numbers that it did it at. Do you disagree with me that the Bollinger Bands are doing their job? Resistance begins here at 139.07 to 139.13. It is not trending. You have a lower low, higher high. The dollar index, you got up just high enough, shucks, to take out 94.31.5. Now that was the resistance point. You see it, I see it. And the market let go with an outside day down. It did not close under the 18-day average, so the bias didn't turn down, but you ended a trend. You now have a higher high, lower low. You got nothing on this chart. You had nothing coming in. You still don't. Eurocurrency, you've got a lower low, higher high. No trend. Currencies, these other markets, they have to now set up whatever they're going to do, but they're not trending here. Even the yen, a lower low, higher high. Look where the yen went to today. If you knew nothing more, and this was the trade, look at it here. I'm going to tell you wherever that Bollinger Band is resistance, support underneath the market, the 18-day average, slid and went right up to it and sold back. No trend again. Bitcoin, still very much in a bull trend. Fully embedded reading. Target still 14,932. This is taking on sort of that safe haven status, or status, I want to own that, it's away from other currencies. I'm going to repeat, this is useless for anything other than you're speculating. Nobody's going to use Bitcoin, in my opinion, to do anything. There will be digital currencies to buy with, ways to buy off your phone and all that, but that'll be controlled by the central banks. In Brent and WTI Crude, you're still very much under the 18-day average. You can see that the market is staying under that. You've got 3 days in a row. It's ready for a bounce. I can make that argument, oversold, ready to get to the right-hand side. I certainly never say go short under a Bollinger Band. And WTI is a whole different world. Look at the differences in these worlds. This is your December Brent. You know something? It isn't your December Brent. I got to bring Jan up. That's what I'm doing wrong. This chart's expired. I apologize. I knew I brought the Jan. I don't know why it stayed in there. My fault. I looked at it going, that can't be right. Here's the differential. You can see how this chart's up there. I'll have that fixed for you tomorrow. D's heating oil is right. Lower low, higher high. I don't know why that didn't stay in the Brent, but my fault. And you can see where you're at. Nat gas, you're down into major support. This is where I think the shorts will cover all their positions. We're warm in the Midwest. We're in the 70s in Chicago. It is November 4th. We're going to set records, and it's going to stay this way through Saturday. Winter will return. It always does. And this market will have gotten a bit too low. They're looking for a 30 billion cubic foot build for tomorrow, which is a low number. Normally at this time of the year, we're in the 50s, 59 level. So that's what I'm looking to see. But this is a big support zone that the market hit today. I want to remind you, I cover in detail starting at 5:40 in the morning in my morning futures video, your day. And I'm going to start you off in a neat way. I open up my charts, and they'll look like this, by the way. This is exactly how they look. More studies than you see here. I get up at about 3:30, 4:30 in that zone, and I do a lot of reading. And it depends what's going on. Last night I think I got 3 hours of sleep so far. But I read like mad. I want to know what's going on in Asia, Europe, America. I want to know what the market's doing as it's coming through everything. Like I did today for my Spider ETF people, I put out a special video because what's the point of me putting one out in the afternoon on a day of an election, the day before, when the world changed this morning? So I gave them one of those, brought them up to date. This is what I do for my subscribers. My subscriptions are not expensive, but they're meant for you to think of me as your soundboard. What does Ira think about the markets? What would he look at that chart? And I think that I look at it ice cold. I try to take emotion out of it. I'm looking at what the markets are doing. Some people think it's all shorter term. It's not. I'm a swing trader. If you think that's shorter term, okay. In terms of days and futures, it could be 3 days, 5 days, 2 weeks. It's rarely longer than that. The long-term positions trades come on my Saturday video. Every Saturday now, included in my subscription, I'm going to just do weekly charts and trends. So now I'm giving you the bigger picture. Those can last for months at a time. So I'm giving you the combination. And by the way, on the daily videos, if I think you should see a weekly chart, I bring it right into it. There's 3 ways to view it too. You can do it on your computer. We give you an application that runs about $35 a month. We give it for free with our subscription. You can watch it either on a pad or your mobile phone as well. So there's many ways to keep up with it. If you download our app, you get a push notification as soon as I put out the videos. Why push? It's free. They're not charging you for a text message. Every video is going to include the news that's impacting the market. I'll typically start you off in the morning with what are the reports for the day, what are the expectations if I can find them for the day, and I cover the markets in this exact sequence all day long. Don't know why that's doing that, but we'll try it again to get it going here. There it is. Pixelation is gone. You know, you work with these videos, different things happen as you play them. So to make a long story short, you get all this, and it's not meant to be expensive. I look at Starbucks as my competition for you. If you go into Starbucks, buy a large special drink, it's about $7. With a tip, you're about $8. That's about what I charge for the first 30 days. Do you like it? You're getting 30 days of videos. Now let me explain that. 6 days a week, I'm recording videos for you. If I have special reports, they're free. Other people pay for them. You're going to get the first dibs on coming into the live webinar with me. The webinars are fixed in size, so once the reservation's made, other people aren't getting in, you don't come in, you won't get in. It's first come, first serve. But they'll pay to come in, you're not. How do you get this? Just go to our website. Take a look at the word research on the top of it, and away you go. It's pretty simple. I'm Ira Epstein. You have a great day. I'll see you tomorrow.